Welcome, welcome, welcome. I want to welcome all you guys back to another episode of the Forex Tech magazine. We want to get right into it today. We got a lot of new people tuning in from multiple streams, so just want to welcome everyone, all the new viewers that's tuning in, and all of you. Hey, just want to welcome everyone here today. Sorry I didn't have the audio on earlier. I want to welcome all of you new viewers turning in, and we also want to welcome all of you old veterans that's been with us for a while tuning in as well. Today, a couple things we want to go over. We want to talk about the trades that we put on yesterday and see how they worked out. We want to do our little section, the what went right, what went wrong section. We also want to go in and we want to talk about what we're going to be trading here going forward. Before I get too far into this, see if something I need to kind of take care of here. Sorry, folks. Bear with me one moment. One second. Okay, hope the sound is okay. All right. So we just want to get into what went right, what went wrong. Before we do that, we want to go over our disclaimer. First thing we want to talk about is that the fact that we are not an investment advisor firm, so the information that you get from us today will not be for investment advisory purposes. The information that you're going to get from us always has and always will be for educational and entertainment purposes only. If you are seeking some financial advice for yourself or for a friend or for your firm, we highly recommend that you go out and seek the advice of a licensed, competent professional. Okay? We're not here to give you financial advice because we don't know your specific situation, and so therefore, haven't taken the time to sit down and do proper risk tolerance evaluation to make sure that your assets are properly managed. So therefore, find someone who has that time that can do that with you. Okay. So now that we got that out of the way, let's get right into this. Right. And matter of fact, we can just go with the chart that we got pulled up here on the screen. Now, last time I talked to you folks, we were down a bit in funds. I believe it was down, what was it, $3,600 is what we were down. And what we were trying to do was in the process of trying to recoup that money and see if we could, make back what we had lost over the previous week. Well, I'm glad to say, after we put the trades on yesterday, we were able to come back in and cut that number in half. Instead of being 3,600 down, now we're only 1,500 down, which is good. Still not there yet. Hopefully by the end of the week, we plan on being profitable, 100% profitable. And then back in the black and moving forward. Okay, but let's go over a little bit of what trades we put on yesterday to help us get to that point where we are at now as being profitable. And then we'll get into what trades we're going to be looking at going into today to kind of keep that going. Okay, keep that momentum going. So the first one we'll get into right now is this is already up here on the screen, is the Great Britain pound, New Zealand dollar. All right, Great Britain pound, New Zealand dollar. This is a really kind of a tough currency to trade. In my personal opinion, I think anytime you trade the Australian dollar and the New Zealand dollar, those currency pairs tend to be a lot of volatility, somewhat unpredictable, and just all around tough to trade, just from past experiences. But coming in trading at this hour, it seems like it has a little bit more liquidity, a lot more fluid. It seems like when trading this pair. One of the things that you'll notice on here, I have a trend line that's drawn all the way from October the 2nd on out. And I like using trend lines. I don't know if it's something that you do, but if it's not something that you do when you go out and you start looking at your entry, exits, and all that stuff, I highly recommend that you do. Trend lines are very valuable. It really kind of helps you pinpoint how the currency pair is moving. And essentially what I did with this particular pair here, I drew the trend line out because we've seen the break here. We saw this breakdown coming down to this point of resistance here. And I took the resistance lines off, by the way. Yesterday, if you was here, you're seeing that we did have the resistance lines up. We took those off for the purpose of this video here. Just want to always like try to operate from a clean chart, as clean as possible anyway. But if you notice here, price was coming down, all right? And we knew it was coming down, but we didn't know where it may stop at. Now, we also know that, just kind of going back over some of my previous discussions that, when you get these support and resistance lines, they typically tend to be U-turns for price. And we knew that this area right here was a potential support / resistance area. And so we knew that there may be a potential U-turn there, right? And actually, I'll put a line right here just so that way you can kind of see what I'm saying. And as you can see, it was, right? Price came all the way down to that line, and then we used to be resistance line, right? Because price hit it, came back down. And I'm pretty sure if we go over, we scroll over, and it became again. And based off of that, we knew that, okay, there's a potential for this thing to U-turn, right? So that also led me to believe, okay, we have this particular point right here that could potentially make price U-turn. We also have price going on an upward trend, right? So there's a potential that, yeah, this thing could continue to still go down, but the reality is somewhere up in here, this thing is probably going to turn around and start going back up. So do I really have enough room to kind of get into a trade? This is going to be a very tricky trade. And what should I even trade it at all? Looking at the 3 o'clock candle, right, still going down with momentum. I went ahead and opted to go ahead and get in, right? And I put my entry 5 pips below the low, right? We got in and we wrote it down, right? And I'm proud to say we was able to get a profit out of it. Now, one of the things that I was doing when I was trading this and some of the other ones yesterday morning is I was moving my stop loss down as my price went into the profit zone, just to ensure that I was going to have a profit regardless of what price done. Regardless of what happens, regardless, if we get a spike up or whatever, if there's a U-turn, whatever, wanted to make sure that we had a profit locked in, no matter how big or how small. And I was able to do that, right? And so that's definitely what went right with this, right? Use your stop losses, always use your stop losses, and then once your currency pair goes into the profit zone, move your stop loss up. Don't be afraid to move your stop loss up, so that way you don't have to worry about that currency pair all of a sudden costing you money. We like to call that a risk-free trade. Once you move that stop loss up past the entry point, right, and you take into account for your spread that you're going to have between the bid and the ask, put that thing in the profit zone so that way you guarantee to make money out of the trade. Because remember, it's not how much you make, it's how much you keep, right? And, this thing could have went all the way down to here, which that would have been great. But then if it goes back up again, right, and then hits my stop loss, because my stop loss is way up here somewhere, what would it have profited me? It wouldn't have profited me anything. I would have lost that money. I just would have been along for the ride. So don't lose money that you don't have to. And if you get into the profit zone, definitely take advantage of that. Lock that profit in, and help yourself out here. Okay, so that's what went right with that trade. Nothing went wrong with this trade this time. Looking at it now, it looks like it's kind of going off to the side. All right, so I don't even know if I really want to get into this tonight. We may still try to get in and just kind of put our stop losses, not stop losses, but our entry points maybe a little bit higher than usual, just to see if it's really going to be something that's going to move. Typically after currency pair makes a big move one way or the other, it does a little bit of a pullback, then it kind of just tries to catch its breath a little bit, right? Move sideways for a while. There's really no big news announcements coming out of in the market for either Europe or the Americas today. So I don't really anticipate, there's no catalyst really that's kind of going to help push this thing in one direction or the other. Tomorrow, though, however, on Wednesday morning, there will be some news coming out. So, Wednesday going forward, there's little, sporadic pieces of information that's going to be coming out that definitely could weigh on this currency pair and some others. And so that might be a better time to trade if you're looking for a catalyst to kind of like get going. I would personally like to trade when there's some type of momentum, either something where it's going up or something where it's going down. When it's trading sideways, when it's going sideways like that, it's iffy, and it tends to be a trap. You get in, as soon as you get in, the thing goes back down. If you're trying to go long, if you're trying to go short, as soon as you get in, this thing's gonna go up. It just happens. So, preferably, me, I like to either trade long or short, and can't really do that when it's going sideways. I mean, you can, looking for your little support and resistance zones, but that's a little bit tougher. And I like to make trading easy, right? And if you can make it easy for yourself, why not? Don't make it harder than what it has to be, right? So that's one. Let's look at another one here. What else we got? Let's look at the Great Britain pound CAD. So this is another one of those ones, right? Where we come in, we do the trend line, right? And also I didn't go over this for the previous pair, but the green line is our take profit, the black line is our entry, and the red line is our stop loss. Okay, and this is where these points were originally placed for these trades. Like I said, all the trades that we did yesterday were profitable. Even though you didn't see right here where the currency pair went down and hit the line, this is another one where I actually moved the stop loss down once we got into the profit zone, and just to ensure that it was going to come out with a positive outcome for this particular pair. One of the things that I was looking at and pay particularly close attention to is when I was looking at this pair here, the trend line. Once again, it had a pretty steep trend line here going for itself. And when I was looking to get in on this one, so here's the 3 o'clock candle, right? And you see how close the 3 o'clock candle is to this particular trend line here. Right? So for me, that's kind of one of those things where, yeah, this could really, go the opposite direction. Now, one of the reasons that I had been encouraged to go ahead and take this position was just because all the other currency pairs for the Great Britain pound were all being sold off. And so once again, just kind of thinking about the whole thing with momentum, right? If all the other pairs are getting sold off, it's going to weigh on this pair too as well to some degree. And sure enough, it did, right? Initially during the 4 o'clock hour, my entry my entry sell was hit. It was triggered. Price began to go up, and then right at 6 a.m., price went down. Right, went down pretty good, and during that time, I was able to put in my take my stop loss, bring it down into the profit zone, and just ensure that I was going to be able to make some money out this deal, regardless of what happens. Then I did. Right, it didn't go too far deep, right, but it did go deep enough so that way we were able to make some money. Right, and just kind of remember that when we're looking at placing these trades, and this is for you folks who haven't had the opportunity to go through and look at the video number 1 when we first came in. We started talking about some of the trading rules that we're going to follow for as far as this London Open trading regimen that we're going to be doing for the next couple of weeks. One of the things that we looked at was that if the candlestick that we were trading off of, which was a 3 a.m. candlestick that was shorter than 50 pips long, then at a minimum, then we were going to try to get 50 pips per trade, right? It was really kind of one of those things where you're almost doing a 1-to-1 type risk to reward ratio. I, however, have made some adjustments to the strategy over the last couple of days, just for me personally, it works a little bit better for me. And one of the things that I did is, I'm not stuck hard fast on that 50 pip minimum. For me, it's just a matter of just make sure we stay profitable, right? I don't care if it's a 2 pip, 3 pip, or whatever, 4. As long as we're profitable, I'm okay with it. The other thing that I like to do is I don't necessarily agree with the 1-to-1 ratio. Um, I try to play around with that ratio as much as possible where I feel like it's going to keep me in a position where we're not going to we're not going to blow up our account. And one of the things that you notice that I've done right here, I kind of put the stop loss back at the top of the high right here, right, which I think is an appropriate place because the reality is if it's going down, it's going to go down, but if it's going to go up, then it's going to have to break that high at some point. It's going to need a higher high, and a higher low for it to continue this upward move. So that's just my little spin on it. If you need to kind of get up to date on the other things that we're discussing over the last couple of videos, you can go back and review the videos here on Twitch. You can also go back and look at us on YouTube. I recorded all the videos and uploaded on YouTube as well. And then if you're just trying to get familiar and trying to just wrap your mind around the basics of Forex trading and some of the lingo and the jargon that I'm using here, go to our website. It's forextechmagazine.com. You can go there, and there is an actual free course that you can take. They help you get better familiarized with the Forex trading. There's also plenty of other places on the internet where you can go and get information about Forex trading as well. But at our site, like I said before, you get the free course. You also got a ton of information there, articles, just stuff that I've written over the last couple of months and weeks and whatever, that's there that you can use to kind of help bring yourself up to speed with Forex trading. Okay, and I tell people, don't think for 1 minute that you have to get all your information from one source. I mean, if somebody is a little bit better teacher to you, if they explain it better to you, and it's easier to understand with them, then definitely by all means get your information from that source there. But take advantage of all the information that's out there on the internet that's going around. There's a lot of free stuff that's out there, a lot of good stuff out there, and there's some bad stuff mixed into it as well. But after you've gone through it a while, you'll start to kind of see some repetitiveness as far as the information that's out there. And usually that repetitiveness, when you start seeing that same information about the same stuff, usually that's going to be the information that's right? Because a lot of people are kind of like keyed in on it, and they're like, all right, this is what it is, this is how you do it, right? And if you got questions about it, I say usually because it's not always, it can be some bogus stuff out there too that people just kind of keyed in and kind of went viral. But if you have any questions about this stuff, or you need some additional information about it, feel free to reach out to us, so that way we can definitely try to help you with it. One of the things that we do is we also do a mentoring program where we come in and try to help people get familiarized with trading, try to help people become better traders that's already trading. A lot of trading has to do with just mentality, believe it or not. You got the charts, you have the indicators and all that stuff, but really you only need a couple of indicators to really kind of go in and get the direction and find your entry and your exit and your stop loss points. The main thing is just making sure you got the discipline to be able to stick with your strategy over time. That's how the money is made. It's not so much just going out there and hitting home runs, but just having the discipline to stick with it over time. That's how the money is made in this industry. Anyway, getting back to this trade right here. As you can see, yep, we got out early, which was good. We made our money. This currency pair, just like the other one we just previously looked at, the New Zealand dollar, Great Britain pound, it looks like it's just trending sideways right now. I don't think it has any real direction. And so once again, we could trade it, but I'm gonna tell you at this point, it might be kind of dangerous for us too. I'll go back in. I'll revisit all this stuff around the 4 o'clock hour just to see if it's something that I'm gonna want to do. But right now, probably, I would probably say no. I think there's some ones that's out there that's a little bit easier for me to trade. And so once again, easy is always good. That's what I like to do. Make that easy money, not that hard money. All right. So let's look at the next one. Next one is going to be the Great Britain pound versus Japanese yen. All right. So this one here is another crazy currency pair here as well, and the reason being is because Japanese they tend to manipulate their currency a lot. Um, so it's one of those ones. Whereas, if you get into it, you got to be careful. You got to be mindful, right? But looking at it yesterday, I got to tell you, it looked really good. It looked like a really great opportunity. So this is 2 o'clock. This is 3 o'clock. Right, this right here is like this was the high from the previous trading period, right? And so looking here at 3 o'clock, say, you know what? Why not? It's going down. If you remember last Friday, it's kind of how I got in trouble last Friday was because I was anticipating that the market was going to pull back from those highs that it had for the last couple of days. And my analysis or my assertion was that it was going to happen on last Friday. And I was actually, a little early to the party, right? It happened Monday. So when I had went in and I put in my shorts for last Friday, I actually wound up being, in the wrong direction against the market. Wound up taking, some huge losses. And thank goodness I was able to get in yesterday and make those losses up. Like I said, today we only down $1,500. And when I say $1,500, that's $1,500 over, our principal. I mean, we're only like $41 away from what our original principal was, but we're $1,500 away from, the cash that we had originally had built up into the account. Anyway, so yeah, 3 o'clock candlestick here. This right here was my entry area, which was a couple of pips down from my. From 3 o'clock candle, and this right here is a little bit more than 5 pips. Because usually we take 5 pips under if we're going to sell the currency pair. And the reason why it's a little bit more than 5 pips, or a lot more than 5 pips, is because this currency pair was already moving when I was initially trying to get in, right? So I had to go a little bit under the 4 o'clock candle where it was at. At any rate, here's another one where we're actually able to kind of move the stop loss, and we was actually able to move the take profit as well along the way, just because saw how strong of a move this currency pair was making. And don't be afraid to do that. Don't be afraid to say, hey, this is where my take profit is, but this currency pair is really moving pretty good. I feel like I can go ahead and go down to like the next level. And usually when I'm moving my take profits, I'm looking for swings, right? And if you notice right here, it's right here, this little swing low, right? And I could have moved it down to here to the next one. Oops. Could have moved it here. Chill. Could have moved it here. If it would just move with me. Could have moved it. There we go. Could have moved it here. All right, to the next swing low, all right, and it still would have been good, right? It would have been profitable, right? If I moved it here, it probably went too far, but you know what? This right here is a swing high, right? Could have moved it there. Same thing, right? So the ideal is, when you get into these trades, don't just sit there and, stare frantically at the screen and be scared. So, yeah, we could have got about almost 80 pips out of this trade right here, had I went ahead and just kind of moved it down and kind of played around a little bit. And at the same time, if you're going to do that, you want to make sure you go back and you want to make sure that you're adjusting your stop loss. Because with this particular trade, I did come in. Oops, I did come in. And I did come in and I did adjust my stop losses. And what I did is I brought my stop loss down below my take price, my entry price. All right. Once again, just to make sure that we got a risk-free trade on our hands. All right. There's nothing better, and I'm telling you something. It's nothing more relaxing to know that, hey, we got a trade in place. and that if this trade starts to go and turn back towards the entry point, that it's okay, because guess what? We're still gonna make money. You know, this right here, when you have a risk-free trade on the books, you can go to sleep, right? Because you know for a fact that, hey, I'm gonna make money no matter what happens, and that's how you want to trade when you're doing currency pairs. You know, I know you see a lot of people come in here and they're doing all this, you know, in and out type stuff, and that's cool, that's good. And don't get me wrong, there's a time and place for that, and we'll actually get into doing some of those kind of like sniper type trades and stuff, where you're doing the scalping, coming in there and operating real quick, fast, in a hurry. But the only thing is, when you do those trades can be very stressful, right? Those trades can move against you really quick. But you got to remember, you got over $5 trillion that's flowing through this market. That's a lot of freaking money, right? And at any given moment, that $5 trillion can go against you, whatever it is you got in your account. I'm pretty sure it's not 5 trillion, right? And when it does go against you or your position, it's going to wipe you out, right? So that's the reason why, you know, doing those little sniper stuff. I mean, it's cool, it's fun, it's exciting, it's, you know, it's energy, it's a rush, right? And it makes for a really exciting stream. But it can also be detrimental to your account, because over time, it could really hurt you. I heard somebody say one time that scalping is kind of like picking up dimes in front of a bulldozer that's like 2 feet in front of you, that's moving towards you, right? So kind of think about that. You got a big, I'm not saying not bulldozer, but a steamroller. So think about that. You got a huge, massive steamroller standing, and you're standing right there in front of it, about 2 feet away from it, right? And it's coming towards you, and there's a whole bunch of little dimes on the ground, you know, scattered throughout, and you're trying to pick those dimes up and not get ran over at the same time. Well, that's what scalping is like in the forex market. Okay, it's a wave of money coming at you that can, this big force of nature is coming at you. It can really knock you out, but at the same time, you're trying to pick up these little, you know, pips here and there, and so you really got to be careful, know what you're doing. All right. Anyway, so this was a really good trade. Yeah, you know, we made money on it, right? Could we have made more? Absolutely. At the end of the day, you know, when you go back and you look at the trades, you're probably going to always see where you could have made more, right? And that's okay. You know, I'd rather be in a trade and see where I could have made more than to be in a trade and see where, man, I lost all of that, you know? You know, so you got to ask yourself, which one do you want to be? You want to be that guy that says, yeah, I could have made a little bit more on this trade. I could have made a little bit more on this trade. Or the guy that says, man, I just blew my account up. Now I got to start from scratch, right? I'd rather be the guy that says, hey, I could have made a little bit more. And it's okay, because you can't not ever, never, ever go broke taking a profit. Just remember that. Never go broke. Never seen anybody go broke from taking a profit, right? But you take losses over time, you definitely can go broke, because they definitely will add up. Okay, so anyway, I'm gonna get out of this one here. Oh, let me show you something real quick. I'm just gonna try something real quick. You've seen this on my last ones where I put in this trend line. And also, folks, if you haven't already, go to the smarttraders.com and go there and get this charting software, right? The link is in our panel below our channel, okay? And I ask that you use that link. And the reason why, full disclosure, we are an affiliate of this this software provider. But here's the thing: even if I wasn't an affiliate of it, even if I wasn't getting paid, you know, a little minuscule amount, you know, when you sign up for it on the paid version, I don't get anything if you do the free version, but on the paid version, you get a minuscule amount. It's hardly negligible, but it's a little something. And it kind of helps us, you know, keep this channel going, because I like to be able to give out free content to you. But the reason why I like this software, and the reason why I stand behind it, I like it so much, is because it is really good. You know, just like how you see me come here and just, you know, I found the low and I just clicked on it. You know, all of a sudden, you know, it puts my trend line out there for me. It's easy to see, and it's just that easy, folks. And it just makes your life as a trader easier. And if you go to our website at forextech.com, forextechmagazine.com, we actually got an article written up. It talks about this software, and it just talks about how easy it is. Look at this right here. Look at it. I don't know if any of you guys use Fibonacci's, right? But if you do, I mean, you're not going to get anything better than this. Instead of me having to try to figure out, you know, where my A and B is, you know, where to draw, you know, the top of that move, in the bottom of that move, all I gotta do is find a low on my chart, anywhere on my chart, click that low, right? And it automatically puts the fibs in here for me, right? And this is perfect, right? And I don't know how much work you guys done with fibs, but this right here is so perfect that all you have to do is just match up the colors. You don't even have to get in here and dig deep in the weeds, right? And what I mean by that is if you just look at the color, right? Let me show you. Let's just look at this real quick. I didn't even plan on doing this, but let's just look at this real quick, right? So I want to show you how easy this is and show you, you know, stop making trading hard for yourself. You know, stop going in here and spending, you know, the whole purpose of trading is so that way you have a better life, you better spend more time with your friends and family doing the things that you love. The problem is a lot of you guys, you know, yeah, you want that, but how many hours are you stuck in front of your screen trying to draw trend lines, trying to draw, you know, Fibonacci, looking at retracements, looking at extensions, you know, how many, you know, how long have you, you know, how many hours are you guys spending doing that? You know, the one thing that you're trying to get away from and you're trying to do, which is spend more time with your family, you're actually spending more time stuck in front of your computer screen because you're having a hard time drawing the stuff on your charts and having a hard time navigating your charts and understanding what you're looking at, right? Don't do it to yourself. Make it easy, right? What I mean by that is, so if you look right here, this thing is color coded. It doesn't get any simpler than this right here, right? You got within the move of the currency pair, right? From the A to the B, right? Then they move it at this fib, right? What do you have right here? You have what? Three colors, right? We don't count the black because the black is just showing where, you know, it's point A, point B. That's it, point A, point B, where to start, where to finish. Start, finish, right? But the move on the inside, right? These are your retracement numbers right in here, right? These are the retracement numbers. But what they did is to make it easy for you to understand how the retracement numbers, right, relate to the overall extensions. What they said is that, listen, if you find the red, right, and then you find the blue and you find the green, if you go back and you look, right, where your currency pair U-turns at, right, then that's where your extension is going to be. And if you look up here, this is where your extension is. This is green extension, blue extension, red extension, right? So once again, all I have to do is find where my currency pair U-turns at, and that's going to let me know where I need to put my take profit at, right? So in this particular case right here, it U-turned within the red, right? Within the red markers, that's where it U-turned at, right? So then what I do is I look at the extension right here. Where's my red extension? Oh, here's my red extension right here. So I just put my take profit right here, my red extension, and what happens? Boom, 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 bow. Boom, it hits my red extension, right? And then after that, it immediately starts to turn back down again. You say, wow, how easy is that? How crazy, how freaking easy is that? Why would you make it so hard for yourself to try to figure out where to put this stuff at when you got a software here that does it for you, right? One more example, then I'm gonna get on to the next one. Same thing here, right? And this does this for you automatically. Just how I went in here and I clicked and it drew all these Fibonacci lines in for me, it does this for you automatically, right? So it automatically comes in, it finds the A, it finds the B, right? And then it tells you based off of that, right? Where's the C? Where's it going to be at, right? Okay, so boom. This retracement right here came all the way back. This is a deep one. It came all the way back to the green. So that means what? I got to put my take profit right here on the green, right? It took a little while to get there, but guess what? Pow! It got there, right? And then it just starts the process all over again. Boom. That C becomes the A. Here goes the B, right? And now we're looking for what? The next C. It doesn't get any easier than that, folks. Does not get any easier than that, folks, at all, right? Highly recommend that if you're not using it, to use it, right? You would definitely get something out of it. It is definitely a good tool to have, and that's not even scratching the surface of what the capabilities for the software is. I mean, there's so much stuff in here. It's a ton of stuff in here, and when we start trading live, we're actually going to upgrade the account and use the full suite of tools that's available. Right now, we're doing the basic, and the reason why we're doing the basic is because we want to show you what the basic can do first, get you comfortable with it, and then we bring you up to the next level, right? We want to upgrade you, okay? So if you're going to be trading with us live, it's definitely something you want to be able to get, so that way you can see what we see. And also, too, we have the ability to be able to share charts with each other, and they also have their own little social networking site within this software community. So it's a lot of benefits that you're going to get out of using the software. Highly recommend you doing it. Definitely check out the article on our website. There's a link there for it as well, and there's also a link in the panel for our channel as well for that software too. Okay. Let's see here. Let's get to the next one. Hey, grind more, sleep less. Thanks for coming out. Thanks for checking us out, bud. Want to welcome you to the stream. Let's see here. Yeah, so getting back in with this channel here, so you guys pretty much see what the thought process was for this particular pair. Once again, it's another one we made money on, right? Would I get back into this tonight? Yeah, I can't say that I necessarily would. Because once again, if you look at it, it's kind of just moving sideways right now. And once again, when it starts moving sideways, I personally prefer to trade in something that's moving, with some momentum, either going up or going down. And just that when it's trading sideways, it doesn't really move that much at all, if any. And then when it does move, sometimes it can move against you quick, fast, in a hurry. So I don't know if I necessarily want to trade this one. Okay, so let's look at the next one. The next one is going to be the Great Britain Pound, Aussie Dollar. If you guys got any questions, please feel free to. If you guys got any questions, please feel free to type it in to the chat box, or you can email us, reach out to us. We got several, different ways to contact us. Choose one, right? You hit us up on Twitter. You can get us on Instagram. Go on our Facebook page. Do comments. Love to hear from you. Love to hear what hear your thoughts. Because remember, this channel is for you, right? This channel is not for me. This channel is for you, right? I mean, I just enjoy doing what I do. I enjoy coming out here talking, right? But ultimately, I want you to be able to get something out of this. Ultimately, I want you to be a better trader. I want you to be the best trader that you can be, right? And so how do we do that? How do I get you to that point where you can be a better trader, where you can go ahead and leave that 9 to 5 when you feel like you're ready for it? How do I get you to the point where you can be able to take your family on that vacation that you've always been wanting to do? How do we get to that point? Well, we got to communicate, right? You got to tell me what it is that you need as a trader, right? And I got to make sure that I can get you that content, right? That I can make sure that I can get that to you, so that way you can be a better trader, right? Because it's possible, man. It's very possible, right? There's money to be made here, right? The problem is, or the question is, are you going to be the person that makes it? Are you going to be the one that makes it with me? Right? All right, guys. So once again, just use a smart tool. Use the smart trend line here. Found the bottom, clicked it, boom, it drew it out for me. Looking at this right here, going back, just kind of revisiting the same mind state that I was in yesterday. We're looking at the 2 o'clock candle here, so the 3 o'clock candle. Look, this thing looks like it's going to go down. Looks like it definitely has potential to continue moving downward. Kind of hesitant though, because it's right here on this trend line, and this is one of the things where you got to always be careful of, because the market does respect these trend lines and these support and resistance lines, right? Whether you may respect it or not, the market does respect it. Once again, one of the only reasons why I decided to go ahead and take this trade yesterday was just because of the fact that there was so much downward momentum in the Great Britain Pound yesterday. Just because they had went so far so fast over the last couple of days, where people were selling off, and I think the reason why they're selling off is they're just taking a profit, right? They want to lock in the profits, because you just never know what's going to happen in the currency pair, so you want to take a profit when you got it. And so I think a lot of the big boys were taking some profits yesterday. which gave us a great opportunity to kind of go in here and do some short selling, right? Now, you see that it did extend past that trend line, and that was kind of a steep one right there, but it doesn't mean that it's not going to be another one that's there that's going to adhere to. And there was a guy, you may or may not be familiar with him. His name is it was Jared Martinez. He's actually the founder of the Market Traders Institute. And I had an opportunity to read his book several years ago when I was first getting into the industry. And if you haven't ever read that book before, once again, I'm not here to endorse anyone or whatever. But if you ever get an opportunity to read that book, it's actually really good reading material. Because one of the things that he talked about was about trend lines and about how trend lines has a correlation with trend lines and the basically the momentum in the market for a currency pair. And it was a really good read, and it's something that I still use to this day. I mean, there's a ton of good information inside that book. But if you ever get an opportunity, and I'm sorry I can't remember the name of the book now, but I just remember him as being the author. I just thought that he had some really great insights. Because at the time when I was trying to learn how to trade Forex and just kind of not familiar with the industry and just really needed some good information to kind of help my development along the way, that book really provided it for me, and I wound up, unfortunately, loaning it to someone else who was trying to get into the industry, and I have not seen them or my book since, right? They probably made $1 billion and just forgot about me. But here we go, I do recommend looking up that book. He's the author, Jared Martinez. Can't say enough about that guy. At least for that book. I don't know him personally or anything like that or professionally, but I just know the information on that book that he had wrote was spot on. So anyway, when we look at this right here, this is the inner trend line and this is the outer trend line. So it definitely broke the inner trend line. So that means that the price is still potentially moving up, but maybe not moving up with the speed of velocity that it was moving up prior, right? Now it has yet to still break this trend line, this outer trend line, right? So it still could be considered to be moving up, right? But maybe not up as fast as it was before, right? And that's why you're not seeing these big of candlesticks right here. These candlesticks are a little bit smaller. If you notice over here, it's a lot more bigger, bigger, right? Bigger. It's a lot more money, a lot more power, a lot more effort going into pushing this price up, a lot more excitement in the market over here than it is right now over here. Right now, it's kind of like, we'll get up if we get up. We'll get there when we get there. But not anything like, boom, let's push through this. Boom, let's shatter this. And that's another reason why I can't necessarily be like, I really want to get in on this. If you remember what I told you a couple of days ago, and that is some of the best trades you ever make is sitting on the sidelines, right? Not making a trade at all. And this right here might be one of those days, folks, where I think it's probably going to be better for us to just kind of sit on the sidelines and kind of watch what happens and kind of how this stuff plays out versus trying to jump in here and trying to make something happen. I mean, it's possible that we could. I'll still go back in. I'll look at this stuff again. I'll analyze a little bit more just to see. But honestly, right now, I'm really thinking that sitting on the sidelines is probably going to be the better route. And then maybe tomorrow we'll kind of look at trying to get in on a move. Either tomorrow or Thursday. Like I said, there's some big information. I mean, there's some, I won't say big information, but there's definitely some information coming out tomorrow that's going to impact the market. So that's going to be a catalyst to get it going. Don't know what direction it's going to go. But maybe by Thursday, we'll have a little bit better defined direction in the market. And in that way, we can jump on that and ride it up and make some more money. Okay? So once again, that's what we're here for, to make money, right? Right? I mean, who wants to go out and give their money back to some Wall Street broker or give it back to some central bank? No, you don't want to do that. You want to take that money and go spend that money on what you want to spend it on, right? So who knows how to spend your money better? You or some hotshot guy with a $4,000 Armani suit on? No, you, right? I mean, I'm pretty sure the guy with the $4,000 suit would love to spend your money, but no, spend your money yourself. All right, so the last one we're going to be looking at tonight, which is the last trade that we made yesterday, which was the Great Britain pound and U.S. dollar, right? And once again, I'm looking up here. I'm looking at the trend line, right? I got a pretty good steep trend line going on here, right? Um, we're looking at where is that? So this is the 1 o'clock hour, 2 o'clock hour, 3 o'clock. 3 o'clock, it broke below the trend line by the 3 o'clock hour. So it's like, whoa, this is already below, and it closed below the trend line by the 3 o'clock hour. So that was pretty good indicator that, hey, you know what, we may have something here. Let's go ahead and buy in. The one thing that you always have to worry about though, when you break a trend line, is price typically tends to try to go back and retest it, right? And you see price did come down and then it went back up again. It's try to retest that trend line. I think that trend line is a little bit too steep, and I don't know if there's enough fundamental information out there in the market to put a catalyst together to get it to go back above that. But it may at some point. The other thing is it may just kind of do what we just talked about, which is, this is the inner trend line here. It may just, if we draw another trend line out this way, it may just kind of stay out that way going forward, Let's see. Yeah, so it may just kind of it may just get lazy and just kind of go out and here and just kind of bounce along. And that's the thing, You got to remember, the steeper the trend line, the more volatility that's there, the more velocity is there, the greater that surge to push that currency pair up. When it starts to kind of get lazy and start trading sideways and then start trying to go up, it's not necessarily a lot of energy in there. And so, it may be one of those things that you want to kind of stay away from for right now. At least I know I do. I don't see any real reason just to jump out here and get in, because I can't really tell which direction it's going. I mean, it may go up, it may go down. I don't know, right? If I had to guess right now, I would say it's going to continue to still go down some more, potentially, right? And it may go down to another support zone, right? Or may even come all the way back down and touch off that trend line. You just don't know, right? But once again, it's one of those things that we'll look at. We'll definitely revisit. We'll analyze it, and we'll see how it goes. Now, Grind More Sleep Last, he asked me, "Are you still down money?" Yes, I am. I'm still down $1,500. But here's the thing about being down the money, right? It was down $3,600 as of last Friday. I came back in yesterday morning, took a big chunk of that back from the market, right? And so now we cut it down from being 3,600 down to 1,500. And if we're looking at it to be profitable by the end of the week, I was hoping to be able to get into a trade today, but just kind of looking at some of these currency pairs and how they're doing right now, I don't know if that'd be the best thing for us to do at this moment. And the reason being is, once again, after the market makes moves, right, makes some big moves, it tends to just kind of take a breather for a minute. And when it takes that breather, this is where a lot of people lose their money at, right? Because it's a little bit harder trading the breather, right? You gotta ask yourself, which one is easier, for you to fly a kite when there's a lot of wind, a lot of resistance going on, and you got that wind up underneath the sail of the kite and it's pushing it out, or if there's no wind steering and you just got to get out there and start running down the road, trying to pick up some momentum to kind of get the kite going. Well, I'm gonna tell you what's gonna be a lot harder. You running down the road and there's no wind, right? Right. So when we trade, what we want to do is not about necessarily being smarter than the market or everyone else. It's just about just being disciplined and consistent, right? And so one of our trading rules is we like to trade with momentum, trade with the trend, right? So if we see a currency pair going up, we want to buy. If we see a currency pair going down, we want to sell, right? And we want to do that consistently over time, because when we have the wind with us, right, we have the momentum with us, we can go a lot higher and a lot farther. The problem is when we got to go out there and try to do all the work, and this is kind of the situation right here when you're doing all the work when the currency pair is moving sideways, is that it's tough, you know. I mean, yeah, there's an opportunity to make some money there, right? There's also opportunity to lose a lot of money too as well because there's no real movement in the market, no real movement right there in that currency pair, right? So what we may want to do, like I said, we had a good day yesterday, and you don't got to be greedy. Um, may want to sit this one out today, and then just look at getting into it tomorrow. Another thing that you have to is really important that you understand is there's a difference between um, being in a worker's mind state and being in a trader's mind state, right? And a lot of times when we're making that transition over from going from the workforce to being a professional trader or just trying to learn trading and trying to understand it, period, right? Our mind state is still focused in on or still tuned into being a worker, right? And a worker is essentially something wrong with being a worker, but a worker essentially has the mind state that okay, every day I got to make X amount of dollars, right? Every day I got to go out here and I got to work X amount of hours so I can make X amount of dollars, so that way when I see my paycheck at the end of the week, I know exactly what I got, right? Trading does not work like that, right? Because there's no set hours that you have to trade, right? And there's no particularly set amount that you guarantee to make on any given day. Okay, so as a trader, you kind of come in here with the mindset of saying that, hey, you know what? I'm gonna trade if the opportunity is available. If the market is, if the setup is there, I'm gonna trade it. But if the setup is not there, and if it doesn't look good, I'm gonna stay out of the market. I'm just gonna sit on the sidelines, right? Because you don't have to trade every day, right? Yesterday, like I said, we had a $3,600 deficit, and we cut it down to $1,500, right? That's $2,100 in a day, right? If you're making $2,100 in a day right now at your current job, then you don't need to be trading. You just need to keep going to work, right? Because you're making really great money, right? The whole purpose of us trading is because we were not making really great money at the jobs that we were making and that we were working at, right? And so the whole purpose of us trading is that, hey, we could do better if we get out here and potentially use the power of the market to kind of help us, make, make a living for ourselves. Oh, I'm sorry, I lost my train of thought. So I'm looking at this move that's happening right here at the 3 o'clock one. So this may actually be something to trade here. We may actually go short on this one. But anyway, get back to the point that I was saying was that, trading is not something that you have to do every day. It's not something that you necessarily want to do for a adrenaline rush, right? You want the market to come to you, right? Not you go to the market. And when you see somebody that feel like they have to be in a trade all the time, or somebody has to trade every day, they're not waiting for the market to come to them. They're going to the market. And then what happens is eventually they start losing money because they start trying to see trades that don't exist. They start trying to see setups that's not there because they feel like they have to be in the market. So once again, you have to kind of change that mentality of being of feeling like you have to make something every day, because you don't have to make something every day. I mean, $2,100, that's more than most people, or some people, I don't say most, but it's more than a lot of people would make in a month, right? Definitely within a week, right? And definitely more than in a day, you know. So a lot of people, if you made $2,100 in one day, you'd probably be good for the month. But I think I'm good for right now, right? Or you may want to go out and do some more, but what we're trying to get at is that you don't have to do 2,100 every day. You can do 100 one day. You can do 200 one day. 300 one day. If you did 2,100, that's great, but it's not something you have to do every day. Trading is not something you have to do every day. You just gotta stick with the plan and be disciplined and continue to trade. So nice work, man. Thanks, Brian Moore. I appreciate that, man. Yeah, buddy. We are pushing it. We're pushing it every day. Well, pushing it every day as far as like our studying and what we're doing and looking at the charts and everything, and making sure that we are up on our analysis of the market. All right, because the best way to trade is to trade, being informed about what's going on. Right. And even though, and this is for all of us, for all of you guys out there, even though we talk about technical analysis, it's still very, very important that you guys go back and you look at the fundamental side of things, right? And I think I told you this before, is that the fundamental analysis, all it is is, the technical analysis is essentially just a visual interpretation of the fundamental analysis that's being interpreted by the market. That's all it is. That's all it is. Somebody comes out with a tweet, there's a release of some information about a currency pair or about a country. Once that stuff makes its way through the market, right, you start seeing a lot of buying and selling within the market itself, right? And so those candlesticks that you're seeing where people are selling off a currency pair or you're buying into a currency pair, that's just the reaction that folks are having through whatever that fundamental information that was released into the market. So it's always a good idea for you to go back, look at what news releases are going to be happening for the currency pair that you're going to be trading, right, during that day, right? Make sure that there's something like a big announcement that's going to be coming out, that you're prepared. And how do you be prepared, you may ask? Well, one of the things that you can do is make sure that your stop losses are maybe not too tight, just in case that there's a spike, of buyers or sellers coming to the market. You don't want to get pushed out inadvertently. Make sure that you have your take profits, in the right position. Once again, you don't want to get taken out too soon. You don't want to sell too soon. You don't want to sell too late. You want to go in there and just really kind of just review your position, and also too, you want to make sure that you're still comfortable with the position that you have. Right. One of the things that I like to do is if we know there's a news release and I'm already into the position, I might just go ahead and take profit, before it comes out. And the reason being is this, right? Because once the news comes out, you're gonna get a flood of buyers and sellers come into the market, right? And I don't care that you have a stop loss in place. I don't care if you have a take profit in place. It may not get triggered, right? Because you got so many orders coming in, so much stuff is going to be coming through. And the worst thing you could do to yourself, worst thing you could do to your family, right, is to have a profitable position in place. And then because you're trying to get another 20 or 15 or 30 pips or whatever it is that you're trying to get, right, all of a sudden you let that big profit that you had in place get wiped out, and then you wind up going negative, for 10 or 15 pips. It's not worth it, right? If you made a bulk of your money, majority of your money, just go ahead and take your profit, take it off the table, right? The one thing about the Forex market is it trades 24 hours a day, 5 days a week, right? From Sunday afternoon all the way up until Friday afternoon, right? You can trade. So you got opportunity to get back into a trade again, right? But once you lose your money, you may not have an opportunity to get it back. And that's key, right? It's not about how much you make, it's how much you keep, right? Well, look, guys, it is winding down. We got about a minute left before we get out of here, right? I want to thank everybody for tuning in, all right? And don't know if you guys got any other additional questions. If you do, please feel free to write them down or send it to us, right? Like I said, love to hear from you, answer any questions you have, right? If not, I'm going to end it on this note here. It was a saying that I love to say a lot, and you probably heard me say it often, but this is by the great Les Brown, and it goes something like this right here, that always shoot for the moon, because even if you miss, at least you'd be amongst the stars. All right, I want you guys to stay safe, and God bless you, and I will see you tomorrow. Happy trading. Also, too, I know someone asked me a question, am I going to trade it all today? I don't know yet. Just because I need to go back and relook at this stuff. If I do, I'm not even sure what direction it may be, but I don't know yet. So that's the answer for right now. Probably not, though. Anyway, take care, guys, and I will see you later.